Hey, Bitcoin wealth builders, Simon Dixon here, and welcome to Bitcoin Hard Talk episode 90. It's Friday, and we have got a lot to cover. The news flow continues as always. We've got a lot to cover in This Week in Bitcoin, a bit to cover in This Week in Macro, and a couple of things that we absolutely must cover in This Week in Geopolitics. So today in Bitcoin Hard Talk, episode 90, we're going to be going through where are the US Bitcoin strategic reserves. What were the three acts that passed, and what does that mean for you and your Bitcoin building strategy and everything that happened this week in Bitcoin? We're also going to be covering in This Week in Macro what you can learn from what is happening in the European Union and Japan and what that actually means for what may come next in both US and China and everything that's happening with all the tariffs and everything this week in macro. And then finally, in part 3, we're going to be covering the war machines, the proof of weapons network double game that was being played this week. Now, there's actually a lot more games. We're going to focus in on two. Firstly, we're going to focus on the US game with Jeffrey Epstein, Trump, and Musk, and the latest that happened this week, and really following the money again so that we've learned a lot more around what may come next. And then secondly, the game that was actually being played in Syria and how to interpret it outside of the traditional media propaganda. And then we can do some forecasts around what comes next. So This Week in Bitcoin, episode 90, we're going to be doing the Syria side. We're going to be doing more on the Epstein side. And we're going to be asking, where are those Bitcoin strategic reserves? So if we haven't met already, my name is Simon Dixon, and I'm going to help you transition to a world of Bitcoin AI central bank digital currencies. We go live each and every week. I've spent the last 25 years of my life obsessing over the topics of monetary reform, investing, and as soon as Bitcoin came out, shortly after, Bitcoin as well, which is the peaceful proof of work in order to combat the violent fiat currency proof of weapons network. And we're going to go through each and every week. We go through exactly what's happening on those networks and how you can do that. So what happened? Let's move into part 1, This Week in Bitcoin. As seems to be coming most weeks when we go live, we need to report that Bitcoin has reached a new all-time high. It's quite frankly, it's literally been making new all-time highs on multiple times a day. And it is showing very different behavior to how it has been behaving in the past. We definitely seem to have moved beyond the 4-year cycle where every 4 years, the number of Bitcoins mined would half, and therefore it would create a supply shock in the path to mining all 21 million Bitcoins. About 20 million of them have been mined already, and over the next 100 years and beyond, there's only going to be another 100 of them to mine. And so therefore, when you are trying to buy Bitcoin, because you don't have to mine them unless you want to be involved in setting up a professional mining operation, you have to buy them from somebody else. And when all of the miners are selling some of their Bitcoin to cover electricity costs, and there is a constant bid to buy those Bitcoin from people like myself that want to exit the fiat currency proof of weapons network and save through a peaceful boycott in the proof of work network and Bitcoin. And it helps me to own my own money, spend my own money, and be able to rely and predict and know exactly what is the fixed money supply and what the monetary policy will always be. While you're arguing with people trying to figure out what the central banksters are going to do next. And because of that, people continually over time, and I can't promise, not financial advice, but over every single cycle over the 4 years that I've been telling people about this since $3, we reach new all-time highs every cycle, and it outperforms every single asset class in every cycle. And so the new all-time high is currently $122,484. But remember, you don't need to own a whole one Bitcoin. If I were you, I'd work like crazy, save as much as I can, sell as many assets as I can, and accumulate your piece of Bitcoin as we go through this journey together. But you don't need to own one whole Bitcoin. You need to get started. If you don't have any already, you can buy $10 worth of Bitcoin, $100 worth of Bitcoin, whatever is right for you, but just own more this month than the previous month, whatever the price is. And historically, that has outperformed every fund manager, every Wall Street, every asset class, gold, real estate, stocks, bonds, whatever. And Bitcoin has outperformed it. And it's reliable monetary policy into the future. Because what is happening in the fiat currency proof of weapons network? Well, yields on which is the measure, the price at which governments need to borrow from you, they're rising. And although they want governments want interest rates to go down at the short term, the long-term loans, if you want to lend to a government for 10 or 30 years, they have to pay you a significantly higher price now than they have historically in other environments as well. So at the same time as the cost or the price at which governments need to pay you in order to lend the money long time is rising, or as Bitcoin has also been rising, and the dollar has been falling ever since we entered into Liberation Day, which was the tariff policy, and the big beautiful bill, and this reckless spending that is happening as you need to roll over the debt-based Ponzi scheme called the fiat currency proof of weapons network with more war and violence and debt and fake GDP in order to create a big beautiful bill that adds $5 trillion onto a $37 trillion national debt and $250 trillion of committed liabilities that is costing $1 trillion in interest just to sustain itself, to the point where America has to grow and engineer fake growth through the government printing fake GDP to buy more weapons, engineer wars with NATO, get Europe to print money so that the proof of weapons network, Lockheed Martin, General Dynamic, war machines can sell more weapons and agitate more war through the intelligence networks in order to prop up the dollar and roll over the debt-based Ponzi scheme. And because the players that know about this, the ones that are not affiliated to America, even though they have their stocks on the American Stock Exchange, and the central banks around the world that are trying to protect themselves from the dollar right now as we enter into this phase, gold is rising too. And on April the 9th, after essentially the 90-day tariff pause, you had these events where the dollar is significantly weakening relative to its long-term bullish cycle. If you read things like the dollar milkshake theory, where the whole world is forced into debt slavery, rather than investing in their own country, they need to hold dollars and they need to hold treasuries and lend it to the US government so the US government can recycle through the proof of weapons network and blow up your country or regime change your country or politically interfere in your country to install a puppet government that will then ensure that the money from your central bank goes back to propping up the US dollar, like the petrodollar and various other constructs like the euro dollar. And the European nations have no autonomy, as we'll be covering this week in macro. Then when the first big beautiful bill was passed, Bitcoin has now become the 5th largest asset in the entire world. The largest asset in the world is gold with $22 trillion of market capitalization. In slightly behind that, as number 2, is Nvidia, which is now $4.2 trillion as it powers artificial intelligence and data centers around the world as the whole world is guzzling up electricity into both Bitcoin mining as well as artificial intelligence. And it has become the new commodity of the future with these data centers and countries all around the world looking to get data centers in their country, and Nvidia providing some of that infrastructure after getting the components of the semiconductor chips from Taiwan that requires commodities from China that keeps this whole network together, while the proof of weapons network pretends to agitate wars when the whole system is connected, including the proof of weapons network share portfolio. Because the third is Microsoft's $3.8 trillion a market cap, Apple's $3.1 trillion a market cap in number 4, And number 5, the 5th largest asset in the world is Bitcoin, that fluctuates around $2.3 trillion a market cap and is kind of head to head with Amazon at the moment and fluctuates between the 5th largest and 6th largest asset at approximately $2.3 trillion of market cap. What about in the currency world? So that's in the asset world. What about in the currency world? So remember, Bitcoin is both a currency when you want to use it as a currency. It's an asset when you want to use it to own your own money, spend your own money, and have a fixed monetary supply because of that low stock to flow of the new supply. But also it is a currency when you want to use it. So in terms of currencies around the world, it has now overtaken, Bitcoin has overtaken the Bitcoin real to become the world's 10th most valuable currency in the entire world. So that's number 10 on there. Brazil's real went down to number 11. Now, speaking of Brazil, just as Metaplanet did with Japan, they gave people with their pension the ability to invest in a company that then is using Bitcoin as a strategic treasury reserve, which means that all this flow of pension money that's trying to protect itself from the devaluation of the dollar, and Japan obviously has that carry trade where the Bank of Japan is a tool for the bank or the Federal Reserve and the banksters that prop up that network that speculate by borrowing from Japan, hedge the currency risks in the derivatives market, and end up buying US stocks and US assets. Now, Brazil is now doing the same. So we talked about this on Bitcoin Hard Talk. Look, I believe that everyone should own Bitcoin. But if you're in a different situation and you need some pension money or your 401k money to have some exposure to Bitcoin, and in your country, you may not be able to get Bitcoin ETFs, and your provider or whatever it may be, it's a headache you need to figure out. But people in Brazil, now a company called Malleus is the first Bitcoin treasury company in Latin America, in Brazil, that is now launching on the US stock market. So you can have that arbitrage between the liquidity of the US market and the Brazilian stock market, which is similar to what happened with Metaplanet in Japan. Now, I'm not saying you should invest in these things. I think everybody should own more Bitcoin this month than the previous month, and they should self-custody rather than going through these stocks that own Bitcoin and various other things. But that is the trend, and they are going more and more of those. Now, it was a big week. The US White House or the US government called it Crypto Week this week. And this is where the Trump administration is really delivering. They're really delivering in the crypto side. Why? Because the politicians want to protect themselves from the dollar. They also want to issue stable coins backed by the debt-based Ponzi scheme. They, in fact, are having an internal struggle. Technology industrial complex faction of the proof of weapons network and the financial legacy industrial complex that has the asset managers and the investment banks and get to create the dollar every time they issue a loan, and are in fact the banks are the shareholders in the Federal Reserve System. They know what's happening, and they also want to be able to own some Bitcoin, as the Trump administration will hedge himself against the dollar by owning as much Bitcoin as they possibly can. So they needed several acts to pass. And this week we had in Crypto Week where all the legislators met up and the Congress voted on whether they want these acts to pass. So initially there was a little bit of drama. 210 Democrats and 13 Republicans voted against advancing basically the Stablecoin Genius Act and the Market Structure Act, which is called Clarity Act, and the Anti-Central Bank Digital Currency Act. So there was a little bit of politica in terms of the normal negotiations that happen in passing these acts. They basically passed and said that we're not going to advance these three acts. And so shortly after, Thomas Massey, who is a libertarian that kind of comes from the Bitcoin standard school of thought, that also, is a student of libertarian Austrian economics via affiliation with Ron Paul type of character, and is also anti-APAC and anti-lobby, and exposes the power of the different lobbies, including the Israeli lobby and on US Congress in order to push these different bills. Well, Thomas Massie came out, and immediately after the rejection of the bill, they said, I quote, they blocked consideration of my amendments to the Clarity Act, which would have prohibited a central bank digital currencies as well. And so immediately that was a problem. Now, what is this act about? They're all about how to classify what's a commodity, what's a currency, what's a security with the SEC, who are they regulated by, what's a stable coin, how do they favor the bank lobby over the technocrat lobby, and all the internal politics that happen. But immediately the crypto market didn't like this. Now, we distinguish between Bitcoin and the crypto market. The crypto market is a mechanism for fooling you out of your Bitcoin. Bitcoin is the decentralized proof of work network that allows us to boycott the proof of weapons network. And there's all sorts of things that are built on top of the general crypto market, and we don't go too far down there. But Bitcoin didn't care because it reached new all-time highs, even though these acts were initially rejected. It's only the crypto market that cared. And so Bitcoin dominance immediately rose, which is Bitcoin as a percentage of the rest of the crypto market. So Bitcoin's about $2.3 trillion right now. The entire crypto market and all the shit coins and all the casino and the millions of meme coins and all that stuff comes together to about $4 trillion market cap. But shortly after, the acts passed. There was a little bit of politica around, should we do one act? Should we do two acts? Should we do all three? What are we going to do about central bank digital currencies? If we approve one and then the CBDC Act, Anti-CBDC Act doesn't pass, then someone would be, Massey would be stuck and various other things. But immediately all three acts passed and the crypto market pumped like crazy. And so US lawmakers have now passed 3 digital asset bills during crypto week in Washington. Is this going to be a week that will be remembered forever? Well, Bitcoin doesn't care. The crypto market does, according to the market. So, as I said, as a quick recap, you now have a functioning Genius Act, which will be rushed to Trump to sign. And once he signs, it is implemented. So the Genius Act allows for stable coins. And I've covered that it gives an advantage to banks and the JP Morgan fraudsters, and they'll be able to offer yield while others won't be able to offer yield. But you can actually register to be a stable coin issuer without actually having to be a bank and all of that. The Clarity Act is around regulations, and I'll be going in today's This Week in Bitcoin, some of the implications around what the processes will be and how it impacts Bitcoin and the crypto markets. And the third does what it says in the tin. It is an anti-central bank digital currency market, which is essentially a surveillance state. Why? Because the banks are the shareholders of the Federal Reserve. So why would the banks want to give all their power over to the Federal Reserve in a centralized entity when they already get to create the digital dollar in a debt-based Ponzi scheme? And the Federal Reserve simply administers the system for its shareholders, and they get to meet every quarter, FOMC, and the banksters essentially get to tell and inflict monetary policy in favor of the banksters, while they lobby the politicians and treasury in order to implement the fiscal policy that allows for a bunch of those bonds to be owned by the banks that get $10 trillion of yield that they get to earn, as well as the Federal Reserve and the 6% dividend that it pays to its bank shareholders. They don't want that. So they don't want a CBDC, but they are actually exploring the technology companies as well, launching their own not central bank digital currency, stable coins. And so there was a concept of whether there could be a shadow stable coin created by a proxy like JP Morgan that is a shareholder in the Federal Reserve. And if they get an advantage, which is exactly what's happening, over a stable coin where they get to offer yield, then essentially it is a shift of power from the Federal Reserve, which has Congress the ability to install their their chair people and various other things that are being debated right now. But instead, JP Morgan gets to do it via a shadow CBDC called a stable coin as well. So it's the usual shenanigans that are played between those that can't follow the money. But when you follow the money and you cover and you watch Bitcoin Hard Talk, we go deep into the detail, follow the money to make sure that you understand that JP Morgan is the new de facto central bank digital currency via a stable coin and via its privatized shareholders on the stock market as well. But initially, there isn't really anti-CBDC language that is included in the Genius Act. Because what it actually allowed for it to do, so if you remember, Trump issued an executive order which was given to basically transfer all of the Bitcoin to treasury. This was around the Bitcoin strategic reserve. There was also another executive order issued saying we don't want a central bank digital currency. So what was the language that was included in the Genius Act? Well, the Genius Act basically said, I quote, HR 1919 makes clear that the issuance of any central bank digital currency requires legislation from Congress. So if you want a central bank digital currency into the future, then the banksters just need to use their bank lobby in order to upgrade the stable coin at JP Morgan into a central bank digital currency at the Federal Reserve, which could be done at a time of crisis as a bank bailout if you want to take all of the banks and consolidate them into one CBDC in a 2007 style financial crisis type of event, or the next flavor of that whenever that is inflicted upon the debt-based Ponzi scheme. So in the end, there was no real CBDC ban, but there was a congressional process for America having a CBDC. There was a head start for the banks over the non-banks and the financial institutions that want to issue these stable coins. So, of course, JP Morgan and the engineers of the Federal Reserve System, they get to have that extra power in the proof of weapons network for the legacy financial industrial complex, which is who Trump mainly represents. He mainly represents both technology and financial in the proof of weapons network. And that is, a bit of a power struggle as well. But anyway, it's not a real central bank digital currency ban because Congress could decide to change it, and Congress is controlled by lobby power. What else happened this week, which was a major announcement as well? Well, if you hold a pension, in America, you have something called a 401k. And America is the largest capital and most liquid capital market in the world as well. And I don't anticipate the proof of weapons network, even as it steals from the American people over to wealth transfer to those that own the shares. As it does that, as it creates civil unrest around America and forgets about those that are debt slaves to the proof of weapons network, it will surely keep the world's the capital market and just turn America into a vassal state as we transition to this world of Bitcoin AI and central bank digital currencies. Anyway, so the Trump executive order was that there is a rumor, it was reported in the Financial Times, that Trump's going to sign next week to allow Americans to invest their 401k retirement savings into Bitcoin and crypto. And so you imagine that that's coming next. That will unlock the stragglers from the legacy financial system. And there is approximately a total market capitalization of basically, now the market capitalization has passed this $4 billion. You've now got the proof of weapons network players that are creating all these strange products for your 401k. But now you should be able to actually own crypto direct into your 401k, depending on this executive order and whether it requires you to do it via ETFs or various other products. But America holds $9 trillion in 401k savings account. I'm not saying that all of those $9 trillion are going to be invested in crypto, but you would imagine that a percentage of that is going to eventually end up in this market as the dollar and Bitcoin continues to have this fixed supply, and you get to protect yourself from the central banksters that are continually inflicting, using their lobby pressure over government, more and more money printing, which is essentially robbing the everyday American to those that have concentrated the wealth and are closest to the money printer. So speaking of money printers, the Fed doesn't print all the money. Most of the money is created by the private banks through the credit markets. Every time they issue a loan, they get to create new digital dollars, and you get a mortgage and they get to create new money. And then you have to repay, and they get to repossess the real estate if you can't ever repay it. And then they get to go to the government and socialize the losses or privatize the gains, or borrow money in the markets in order to underwrite that risk as well. So now the regulator of the dollar, essentially the OCC, and the Federal Reserve, and the bailout insurance policy for the bank. And by the way, FDIC only has about 1% of all bank deposits. So it's kind of a little scam where it could have one bank go down, but then you can find a new tool from the Federal Reserve, or you can just go to the taxpayer and say, you pay for it while we keep the profits, as we have continually seen time and time again. But anyway, the OCC, the regulator of the currency, the Federal Reserve, the creator of the debt-based Ponzi scheme with the banks as shareholders, and the insurance of the bank deposits, FDIC, that if in a case of a bank distress, they come in and take over the banks. They have reiterated the statement this week: the banks may offer custody and safekeeping of crypto assets such as Bitcoin, and that all can happen under the existing risk management, basically everything that exists right now. And so banks, if they want to start using it as part of their asset base, are able to do that right now under the current regime, and they don't have to wait for anything if they want to do that. Now, remember, you're going to own your Bitcoin in self-custody. You don't want to be collateral for a bank and a debt-based Ponzi scheme and allow them to take your Bitcoin and earn yield on your Bitcoin because they'll borrow against it, and then they'll have discount windows into the debt-based Ponzi scheme so that they can then use the yield in order to buy more Bitcoin or issue their stable coins or whatever their model is. You want to be able to own it yourself, spend it yourself, and own it in self-custody. But in this transition, because I've covered it on many episodes of Bitcoin Hard Talk in This Week in Bitcoin, I've talked about the conflicts of interest between what World Liberty Financial is doing, which is issuing its own stable coin, and World Liberty Financial is the Trump family's and Steve Witkoff, the envoy for the Middle East, their company that is engaging in all sorts of things around Bitcoin and DeFi and stable coins, and those that would benefit significantly from these acts passing. We had in prior weeks, we covered how Trump had to divest through a trust company some of his holdings in World Liberty Financial, but essentially it's for his family as well. But we've followed the money a little bit as well. And we have seen, remember that Trump meme coin that he launched? I had a little look at some of the wallets, and essentially those wallets from Trump token have been heading over to the exchanges. And so there was another deposit of approximately 3.5 million Trump token, which at the current price that I was looking at this was valued at $52.6 million that was sent to exchanges. And these exchanges were Binance, which was originally a China-based exchange that then moved over to a Japan-based exchange and then moved over to a European, Cayman, and various other jurisdictions. Binance, and OKX, which is a China original-based exchange that then moved over to Hong Kong, Bybit as well, and Coinbase, a US-based exchange. And on basically May the 10th, that's when a new deposit was made. This is the fourth significant deposit of Trump tokens to the exchanges since April the 28th. This basically brings a total number of the Trump token, the shit meme coin that he dumped, that sucked up all the liquidity and has been going down since, from the crazy pump fun like meme coin markets that we don't mess around with. People use it to try and get more Bitcoin, gamble and speculate. You don't need to be involved in any of that stuff. But it was bringing basically a total amount transferred to the exchanges of 12.5 million Trump tokens from the entire supply. If you take all of the transfers and you value them, this is valued at approximately $120 million. Now, what did the team state that they were sending that over to the exchanges for? They were basically saying these are deposits in order to support liquidity operations, i.e. market making, market manipulation. And when there is a high demand for the token, they want to provide liquidity. This is the type of self-dealing that normally is segregated. But because we now have this transparency on a blockchain, we're able to trace this. But once it enters into the crypto exchange sphere, it's then in a centralized mess where you don't get to see what transparency. Anyway, large transfers to exchanges normally mean that these are people that are looking to sell those tokens. And if they're not selling them, they're using price volatility and market making. And we saw during the Celsius bankruptcy and the FTX bankruptcy and all of the other bankruptcies that these tokens are used for complete shenanigans, market manipulation. And in the case of the Maszynski that just went down for 12 years, he was using the sell token in order to pump the price, hide all the fraud that was happening on the balance sheet of his Ponzi scheme called Celsius, and engage in all sorts of crimes and then borrow against it and steal money through stable coins and all sorts of shenanigans. Not saying any of those things are happening, but you need to be aware of these things. Anyway, Trump's World Liberty Financial is also accumulating lots of Ethereum. And so Ethereum is the second largest cryptocurrency. It's a proof of stake network rather than a proof of work network. What that means is that by owning the ETH token, you get a vote in the governance and validation fees in the network, which is different to a proof of work network. So by owning ETH, and there was a pre-mine, you get to have significant control over the network. Unlike Bitcoin, if Bitcoin, whoever owns it, it doesn't matter. By owning Bitcoin, it doesn't give you control over the network because it works off a proof of work mechanism. There's different players involved in that. Anyway, Ethereum basically added about this week $150 billion in market cap ever since July the 1st. So the market cap has been increasing significantly. After a long time, multiple years of underperforming Bitcoin, it entered into an overperforming phase. Now, because it was significantly having a very bad market, there was massive short exposure with speculators using derivatives in order to try and profit from Ethereum going down. But the short exposure basically reached record highs, and the net short exposure was approximately 25% above levels that were seen in, say, February 2025. So there was a massive amount of short exposure, which means derivatives are betting on Ethereum going down. But this month, and around the time that the World Liberty Financial was accumulating and all of these acts were passing and various other things were happening, the price of ETH this month surged, well, basically less than a month, approximately 70%. And so that created one of the largest short squeezes that we've seen in crypto history. A short squeeze is essentially where you're borrowing the crypto in order to short the crypto on leverage. And then as the price goes up, you need to cover that short position by buying more of it. And then that creates a self-perpetuating short squeeze where essentially the price keeps going up in order to cover some of those leverage short positions. And as a result, we basically saw billions of dollars in liquidated shorts. It wiped out many of those short sellers. And heading into July the 1st, essentially, BlackRock's ETF was adding more and more Ethereum. In fact, during this period, 29 of the previous 30 days were net inflows, which leads to buying more shares in the Ethereum ETF, which means BlackRock has to buy more Bitcoin. So BlackRock has been accumulating their position leading into this short squeeze as well. And then what did we get? Basically, announced on the stock market was an ETH treasury company headed by, I think his name is Tommy Lee as well. And suddenly he's an ETH maxi, and we start to get these big price increases in stocks that are holding ETH on their balance sheet, like a Bitcoin treasury company. And then what do we get? We get an announcement around the time that these acts are passing that BlackRock is now filing with the SEC to take all the Ethereum that is held in the Ethereum ETF and stake it. And because proof of stake means those that hold the token, even if for somebody else, stakes it, then they control the governance of that network. And if BlackRock is now going to be launching tokenized exchanges and is going to be using Ethereum as that mechanism, like it has with Securitize and Biddle with their tokenized treasuries, then they are accumulating a position. And this is exactly why proof of work was created the way that it was, rather than proof of stake, because owning the Bitcoin in a Bitcoin ETF does not mean that you control the network or the governance of it, but it does with Ethereum ETF. So once BlackRock essentially controls the ETH stakes, you'll find out why Bitcoin proof of work matters, as some of those code changes happen and things happen with stablecoins being listed, and this network becomes centrally controlled with some of the largest pools of capital. Now, under the Clarity Act, they decided to create a process for how these different types of crypto tokens would be classified as either being regulated by the securities regulator, i.e. the Securities and Exchange Commission, or being classified as a commodity which is sufficiently decentralized. And basically, they created a definition which is called a mature blockchain system. And in the Clarity Act, it defined a mature blockchain system as a blockchain that is, quote, that is not controlled by any person or group of persons under common control. And so basically, projects can now gain this status by certifying themselves with the SEC. So the SEC is now going to become the arbitrage of whether these things are decentralized or not. This basically involves a project issuer, and if there is a foundation and a person to apply, this is why Bitcoin is so different. There was no way of applying to the SEC. There was no one to make that application. There was no foundation that controls and changes the codes and various other things. But essentially, it basically involves the project demonstrating that it is decentralized, and it needs to demonstrate it to the SEC in terms of decentralized governance, decentralized development in terms of open source, decentralized operations, and the maturity status leads to basically a lighter regulation and the treatment of the basically associated digital asset as now being a digital commodity rather than a security. Now, the real difference with that is that you now go through a certification process. The project issuer must file this maturity certification, and the SEC is going to be doing it. The SEC makes the evaluation, and there'll be a team to do that. It needs to demonstrate the decentralized nature of this. Now, the certification is going to become effective if the SEC does not object. So you apply, the SEC does not object, and now you are classified, and now exchanges can list you and treat you as a digital commodity rather than a security. And so at this point, basically, the crypto is considered mature and subject to reduced regulatory obligations. And the Clarity Act, in its opening, decided to take 3 assets that is already classified as mature. One of them is Bitcoin, obviously. The other is ETH. And the other is Cardano, ADA, as already being certified and exempt from the SEC. We also know that the founder of Cardano, Charles Hoskinson, was a big contributor to the crypto lobby when installing Trump in order to get this crypto legislation and regulations, and was hugely likely involved in all of these processes, because there is now a big crypto lobby that exists, and Bitcoin doesn't really lobby because Bitcoin doesn't have any central counterparties that print these tokens and lobby to try and get these favorable treatments. Now, the big difference, of course, is if you get treated as a security, I know this is a little bit geeky, then securities are subject to what's known as accredited investor rules, which means that you can only buy those if you're exempt by being a high net worth investor. And if you are not a high net worth investor, then you may not qualify in order to invest in these different exemptions, which is a huge amount of the liquidity. So this could suck a lot of liquidity out of tokens and push them into those that are certified already. And this is essentially, with the exception of Bitcoin, a way of SEC regulatory capture and arbitrator of who is sufficiently decentralized when there is a centralized counterparty that will be applying for that. And guess what? It will be lobby pressure and shadow Fed chairs, just like SBF when he was involved in Operation Choke Point 2.0, a Federal Reserve operation to hand over parts of the market to BlackRock and the TradFi players. And SBF was the only one that could meet with the chair, Gary Gensler, of the SEC during the Biden administration, and therefore was the only one that was drafting legislation for the crypto market that meant that it would lead to having to use an exchange or a hedge fund like Alameda Research, which was a massive PSYOP fraud in order to create distress in the market and profit from the pumps and dumps and all the bankruptcies that all of those in the know at the proof of weapons network were bidding on all those assets in the cheap at the bottom of the market. Everybody that had Bitcoin at FTX got like $16,000 for their Bitcoin. Today, it is worth approximately $117,000. That excess value went to paying lawyers, banksters, $1 billion that was spent in the bankruptcy process. Anyway, what this also highlights is that when you have things like the Clarity Act, people tend to circumvent adding utility to these different types of securities, tokens, whatever we're going to call them now. This is why, prior to the Clarity Act, a meme coin exchange or a meme coin decentralized marketplace, whatever you want to call it, Pump Fun, which I don't use for all of these meme coins, they essentially launched a utility token with no utility because they're trying to make sure that they're not classified as security. And so a bunch of people invest $500 million, $500 million to buy this token that does nothing and is not even connected to the exchange in any way. But hopefully with this, it could be classified as security, but then you have all of the different types of rules. So this is regulatory capture of the shitcoinery part of the market and the reason why Bitcoin exists. And obviously BlackRock is favoring their token that they're accumulating the stakes in as we list into the stable coins and various other real world assets in these tokenized exchanges, which is why in the end, everything comes back to the resistance of Bitcoin proof of work, because it doesn't require any of this these types of regulators or approvals or human failures or anything around it. And so, prior to the Clarity Act commencement, they couldn't have any connection to the business because they didn't want to fall under the Securities Act. And so therefore investors get this shit token that does nothing and then maybe later they can connect it to the business as this clarity comes through. Anyway, few more news. I told you there's a lot on the Bitcoin side. We've got a few more stories, and we're going to also give a little bit of updates. It's going to take the majority of Bitcoin Hard Talk today, and then we're going to move over to a shorter macro section, and we'll try and get all this done in the 3 parts. Right. If you're enjoying this, now let's move over to what's happening with some of the companies, the Bitcoin treasury companies. So Strategy has now become the first publicly traded Bitcoin company in America or the world that now owns over 600,000 Bitcoin. So of the 21 million Bitcoin, 601,550 of them sit on the balance sheet with Coinbase custody in Strategy, which is a publicly traded company. So Strategy shareholders get exposure to 3% of all of the Bitcoin with a promise that they will never sell it, and they will continue buying the top forever. And so people are paying a premium because they're using their operational business on top of that. I don't recommend messing around with these things, but sometimes in your pension and various other things, people are using these products. Now, Vanguard, which is one of the largest players in the proof of weapons network, you've got large asset managers like BlackRock, State Street, Vanguard, and then you've got other types of investment banks like JP Morgan, Goldman Sachs. And then you got retail brokers like Morgan Stanley, and then you got the creators of money like Chase Bank and Citibank. This makes up the financial industrial complex division of the proof of weapons network. And at top are the asset managers that pull together all of your money, insurance money, endowment money from universities, pension money, and they package it all together into ETFs. And by doing this, they get the board seats and they get the voting power in many of the 20,000 companies that they own shares in. But one of the vital players, which is a private player, Vanguard, is now the biggest shareholders of Strategy. And so they have indirect exposure to Bitcoin, but at the same time of BlackRock and State Street, Vanguard is the only one that is not embracing offering Bitcoin ETFs or Bitcoin products to their clients. So they still won't offer Bitcoin to their customers, but they are the largest shareholder in Strategy because they want Bitcoin exposure as well via these types of mechanisms as well. And obviously, there's difference between actively managed funds and passive funds and various other things, but let's not go into the detail for this. So what comes next? Now, remember what we said earlier, that the Financial Times reported that Trump is going to be signing an executive order. They said this week, maybe it comes next week, but it will allow 401k retirement plans to invest in crypto. So even if Vanguard is resisting for either front run or regulatory reasons or whatever it is, everyone that's got a 401k is now going to be able to have Bitcoin in their 401k. And if they can do it via BlackRock and State Street and others, then Vanguard is going to be capitulated into the market, which is complete exposure to all the different players that have to now allow retirement funds to be protected by having Bitcoin in their retirement funds as well. Now, remember, I always say self-custody is the true power. But I'm going to go a little bit into how you can make those decisions, because it's quite nuanced between self-custody and custody. And I want to give you some resources so that you can actually practically make some of those decisions as well. Just before we do that, we got a few more stories. If you're in Australia, Bitcoin holders can now, just like in the US with Fannie Mae and Freddie Mac, they can now use their crypto as collateral in order to take out mortgages, so it can be part of your net worth. And if you are in France, France lawmakers have now proposed basically a 5-year Bitcoin mining pilot program, which is going to be taking excess electricity in France, take the surplus wasted electricity and utilize it for Bitcoin mining in order to stabilize some of the electricity grids. Which is something that happens in Texas, happens in Kingdom of Bhutan, happens around the world with different players in different African nations as well. So now we got European nations, and France is going to be the first one that I'm aware of that is going to be utilizing Bitcoin mining in order to make their mining grid and utilize wasted electricities as well. Now, remember on the surveillance side, because on the AI side, we've always been covering it. There was an announcement that Elon Musk, I'll be covering more on Elon Musk in the macro section as well. But XAI announced that it has got Grok for governments. Yikes. And basically their first contract is with the US Department of Defense. And so while Palantir is using artificial intelligence to do genocide as a service in Gaza, occupation as a service in West Bank, drones as a service in Ukraine, surveillance as a service in UK, Hajj as a service in Saudi Arabia, surveillance and as a service, state surveillance and CCTV and various other things as a surveillance in Europe, and also pretend border service in America so it can be used against the American people. Now the beta tests are through. You've also got XAI, which are the PayPal mafias, Peter Thiel behind Palantir, Elon Musk behind X and XAI, and Tesla and various other massive data centers, Doge. All of that data in the big, beautiful bill can all be consolidated and rolled up and used with contracts at the Department of Defense. Initially, they'll say it's borders. Then they'll use it on you, just like Patriot Act and various other legislation that can be used so that they can start defending and using and building those social credit scores and various other things, which is why we need decentralized data. And they can integrate, Musk is definitely going to be issuing a stable coin now. They have Genius Act, and then likely will be using X data for social credit scoring. And more banksters are essentially jumping on board these different types of psyop crypto assets. But hopefully you understand that Bitcoin proof of work is your resistance against it, even though with your spending money, you may need to engage in some of these banksters projects. So I guess I've got to list off my little updates from the deep state actors at the proof of weapons network that are now deciding how they can engage in this. So let's lift off some of those projects. This week alone, Standard Chartered launched their spot Bitcoin trading for institutional clients in the UK. The $700 billion Deutsche Bank, which was a product of the Nazi regime after the Bank for International Settlements handed over much of the gold through the Federal Reserve and the closing of the Reichsbank and the opening of the bank, the central bank. And then you had the chosen Deutsche Bank. They're going to be offering Bitcoin as it is now basically said that it is maturing and that pensions and sovereign wealth funds will be the next to basically allocate funds to Bitcoin and the market. The number one shareholder in the Federal Reserve, JP Morgan, and Jeffrey Epstein's bankster, the CEO Jamie Dimon, that settled $280 million with Jeffrey Epstein victims as a result of facilitating this pedophilia network. Their company said that they will get involved in crypto stablecoins. They're already involved in stablecoins because they were involved in their lobby money to make sure they were the only shareholder of the Federal Reserve that could issue yield on their stablecoins. Speaking of the PayPal mafia, the PayPal ex-co-founder, Peter Thiel, the Palantir financial terrorist, has basically now acquired a 9.1% stake in Bitmine, which is one of the largest Bitcoin mining companies out there. The Bank of America expects to launch a crypto stablecoin. That was reported by Reuters this week. And one of the people that were mentioned in the white paper, Adam Back, that created a company called Blockstream that had a bunch of Bitcoin, has now gone full on deep state and is engaging with financial terrorists like Howard Lutnick, who created Cantor Fitzgerald, who basically is the neighbor of Jeffrey Epstein, that is deeply connected to Mossad and always sits behind Trump whenever he's handling Trump at important meetings, like his recent comment this week. We'll be covering a bit more about that in the macro section. But anyway, Adam Back has decided that he's going to be launching a new Bitcoin treasury company, BSTR, and it's going to be launching with 30,021 Bitcoins that are going to be instantly going to become basically the fourth largest Bitcoin treasury company on the New York Stock Exchange. That's basically a $1.5 billion cash allocation in funding, and this will make it the biggest SPAC. A SPAC is where you buy a shell public company, then you reverse merger a business into it. And what is he doing? He's basically doing Cantor Fitzgerald financial engineering, because when you live in the US, you have to go through all these crazy tax structures in order to do a deal. So while they'll be saying that this is a game-changing company, look, you might get a pump and dump out of it. Stick with Bitcoin. You don't need to know any of this stuff, but I want to give you the detail so that you can understand the crazy shenanigans that are being played, because TradFi wants your Bitcoin and they don't want you to own it in self-custody. When they want you to do that, you should do the opposite. So basically, Cantor Fitzgerald is raising this $4 billion SPAC deal with Adam Back, using Adam Back's reputation to buy billions of dollars of Bitcoin. This I consider the opposite of the cypherpunk movement, and it should be condoned. But why are they actually doing it? I looked a little bit deeper into that. Basically, you're doing business with Jeffrey Epstein's neighbor's firm, and basically Trump's Mossad handler, from my perspective, allegedly. I'll give you a little bit more in this week in macro, the connection between everything that's happening with the Epstein files and Trump. But basically, it's a tax incentive. Blockstream, I'm guessing, has a shitload of Bitcoin held upon its company. From my understanding, Blockstream is a Canadian company. And what it will probably be doing is transferring the Bitcoin through some kind of mechanism from Blockstream to the SPAC, transfer that Bitcoin over. Then the Bitcoin they're hoping will trade at a premium to the Bitcoin value by having a bunch of pump and dump artists that manipulate the price or do whatever they're going to do with the price, so that the stock trades higher than the net asset value of the Bitcoin. And then Adam Back or Blockstream or Cantor or whoever can use the stock as collateral, borrow against the stock, and turn a beautiful asset, Bitcoin, into a construct of the debt-based fiat currency Ponzi scheme, because it has tax benefits in order to do that as well. And it will be backed by a stock which has got some Bitcoin in it, and essentially constructing a Bitcoin structured product. And more of these are going to be coming, and they want you to buy their stock with some Bitcoin rather than you just owning the Bitcoin itself. So you can either be a product of Bitcoin structure. Okay, awesome. Right, let's get back right into it. Okay, so now I've been warning people against borrowing against their Bitcoin and the risks. I'm not going to go through all of that today. I told you we got a long one in the Bitcoin side today. But Bitcoin-backed loans has now crossed $1 billion in collateral on Coinbase. And so as this fiat currency product network and structured products through all of the ecosystem is building, and people are going to be doing that. Make sure you watch some previous videos on my warnings. Make sure you risk manage these things. If not, avoid these things altogether. I've been given many of these different things. Anyway, hopefully, and I say hopefully, we're going to play Azad. You can pull up their AI video soon. We're going to go straight into this. My hope is that you understand the difference between self-custody and custody. And so to try and help you with that, I did a bit of a debate with people that support TradFi, come from TradFi, and some of the cypherpunk movements and people like myself that really encourage self-custody, with also some of the nuance of understanding that there is tax, inheritance, and various other considerations as well. So while I'll tell you what I think you should be doing, at the same time, I recognize that there is different types of elements and pension products and various other things. But my hope is that now these acts are passed, there is strong protections for you to be able to self-custody. But I haven't read through everything, and I'm hoping the Twitter sphere of lawyers and FinTwit are going to go out there and make sure that there aren't too many problems in terms of allowing Americans to self-custody. And so what I wanted to do, I've got one more major story to cover in the Bitcoin section. It's a longer section than usual, which is on the Bitcoin strategic reserves. And just before that, I wanted to give a little AI summary of a blog post that I think is going out today. I'm not sure if it's live yet now, or will be live shortly after this, and we'll link to it in the description, of just give you a little AI summary of a debate around to self-custody, to custody, or to self-custody, and a bit of a debate so that you can have that educational content. If you want to watch it yourself, the full one with a blog and summary and links to resources, head over to simondixon.com, click on the blog link, and type in custody in the search field, or you'll just find it as on page 1, depending on when you're watching this. So just to give you a little bit of a teaser of the content and the TLDR for those that don't read it, Azad, let's now play the AI summary of to custody or self-custody.
Welcome to the deep dive. Today, we're tackling a really big question. It's technical, sure, but also kind of philosophical.
Yeah.
Once you actually own Bitcoin, how do you store it? Mm-hmm. We're going to dive into this debate that flared up, I think it was July 1st, 2025. And we're using Simon Dixon's blog as a guide. He was right in the middle of it.
Yeah, and it's fascinating because it really highlights this core tension, doesn't it? It's this battle between keeping Bitcoin pure to its original ideas and, well, making it practical for everyone to use.
Right.
But Dixon's first piece of advice, his constant advice, really, to you, the listener, is super simple. Just get off zero.
Meaning just own some Bitcoin, anything.
Exactly. Own any Bitcoin. And, you know, the kicker is he's been saying for 14 years, just buy a bit more each month. Simple rule.
And that simple rule,
for anyone who's stuck with it for at least 4 years, Bitcoin has beaten, well, every other asset class. That's quite a track record.
It really is. Okay, so let's unpack the two main sides of this storage debate. First up, the argument for self-custody. People like Simon Dixon, Dustin Stockton.
Right. They see self-custody as, like, vital for the soul of Bitcoin.
The soul of Bitcoin. What does that mean in practice?
It comes down to those original revolutionary ideas, you know? Money you can actually own, money you can spend without asking permission, and that fixed supply.
Okay, so the ownership part is key.
Absolutely. Because if you use a custodian, like an exchange or a bank, you just have an IOU. It's not really yours in the same way. You need their okay to spend it.
Which opens the door to censorship.
Precisely. Dixon even calls self-custody a way to boycott what he terms the proof of weapons network, basically bypassing the traditional financial system, the Fed, big players like BlackRock.
And Dustin Stockton had that really powerful story.
Oh, yeah. That was quite something.
He was apparently debanked, kicked out of 8 banks, he said, for political reasons, and he survived for 4 years with no bank account.
That's self-custodied Bitcoin.
That just makes it so real, doesn't it? It's not theory anymore. This shows why self-sovereignty matters, especially if you might face censorship like that.
It really underscores the point, but then there's the other side.
Right, the pragmatists, the ones focused on mass adoption.
Uh-huh. People like Joe Carlosar, Gary Cardone, their focus is bringing in the next billion Bitcoin users. And for them, that means it has to be easy, low friction.
No complex stuff.
Exactly. Carlosar basically called self-custody a usability nightmare. You know, seed phrases, hardware wallets. He thinks it just scares people off.
Those long lists of words can be intimidating.
Totally. He even brought up Hal Finney's prediction from way back in 2010, suggesting Bitcoin might just end up as like a reserve currency for banks, not something everyone holds directly.
And Gary Cardone, he seemed pretty frustrated too.
Yeah, he shared his own bad experience trying to use hardware wallets, called them frustrating, and he criticized Bitcoin's marketing, calling it horrific for making newcomers feel dumb with that not your keys, not your Bitcoin purity test.
The classic line.
His point was, look, we need to make it easy to get trillions of dollars into Bitcoin. And things like ETFs, custodial solutions, they do that.
Okay, so we have these two strong, almost opposing views. Ideology versus practicality, security versus usability. How does Simon Dixon suggest you, the listener, navigate this? What's the takeaway?
Well, he concludes it's not really a binary choice, not strictly one or the other. It's more of a spectrum.
A spectrum.
And let's be honest, most people starting out, they'll take the easiest path, buying on a centralized exchange.
Which goes back to his first point.
Yeah.
Just get off zero. Don't let the complexity stop you from starting. Avoid that analysis paralysis.
Exactly. But here's where Dixon adds a crucial next step, something he thinks is really important for your journey.
Okay.
He believes once you own some Bitcoin, you shouldn't just stop there. He really urges everyone to buy a hardware wallet, take some Bitcoin off the exchange, and actually learn how to use it.
So it's not just about the security aspect.
Not entirely. He calls it experiential learning, learning by doing. And he thinks this skill, managing your own keys, your own digital assets, is going to be vital, especially with things like decentralized identity coming, AI, and, let's face it, a growing surveillance state.
Interesting perspective. Learning self-custody is a future-proofing skill.
Right. So ultimately, the right way for you to store your Bitcoin, it probably involves a mix. Diversification, it depends on your situation, taxes, inheritance plans, how comfortable you are with security.
So this deep dive really shows that storing Bitcoin is about balancing these big principles with, day-to-day reality.
Yeah. The key message seems to be, don't let the fear of self-custody keep you from starting. Get some Bitcoin first.
Get in the door.
But then don't let the convenience of just leaving it on an exchange stop you from learning what makes Bitcoin truly revolutionary. Learn how to be sovereign with at least some of it.
Get in the door, then understand the power. That makes sense. Which leaves a really important question for you to think about. As technology keeps changing, as society shifts, how will your own approach to managing your digital assets, your sovereignty, evolve? Something to mull over.
Okay. Hope you like my little AI buddies, give you a little break from my voice as we do these Bitcoin hard talks. I got one more story in the Bitcoin section, and then we're going to go right into this week in macro. And then we've got the final section this week in geopolitics as well. So let's go straight into the final story. And this is an interesting one. If you're a long-term listener of Bitcoin Hard Talk, you'll know that we've shared this journey of America stating that it's going to be having a Bitcoin strategic reserve. What this essentially means is that the treasury, which is independent of the central bank in the case of the US, can free itself or have an asset equivalent value of the balance sheet of the central bank in a case it ever needs to reform or do some of the monetary reforms that I've been sharing my whole career, even before Bitcoin was created. You can build an asset called a Bitcoin strategic reserve. And when you need to, in a time of crisis, you might be able to reshape the financial system and the Fed and implement some of these things like Ron Paul and Rand Paul and Thomas Massie have been advocating for over the years. This from the libertarian side as well. Well, America announced, and Trump kind of his entrance into the market was at Bitcoin 2024. And in Bitcoin 2024, this whole concept of doing a Bitcoin strategic reserve led to a bunch of crypto lobby and Bitcoin lobby giving him shit tons of money to get into his campaign. And then immediately he did an executive order to form a Bitcoin strategic reserve. And it was that it needs to be done in a market neutral way. What that means is they can't take taxpayers' money and print money to buy Bitcoin, which is actually better than printing money to buy weapons in the proof of weapons network. But anyway, that's how the proof of weapons network works. But if you can do it in a tax neutral way, i.e. America's gold is valued at 42 cents from the legacy gold standard system and the post-Bretton Woods pegs when the Nixon shock happened and they decoupled fiat currency from gold. But you could revalue it at today's price, which is approximately $3,400. And then you could use that value in order to accumulate Bitcoin, sell down some gold, or you could do a number of different assets in a tax neutral way. I mean, basically, you can't print money to buy Bitcoin was the executive order. Now, they've been going through all these different acts first. So Clarity Act, Genius Act, Anti-CBDC Act, as I said. But what they did reach upon is it didn't require an act of Congress in order to buy Bitcoin in a market neutral way, a tax neutral way, and also to essentially take the seized crypto assets and Bitcoin that the government and Department of Justice has stolen from those that engaged in criminal activity and were trialed for that, and hand it over to Treasury. And I talked a long time ago about how, but if it's held at the Department of Justice and there's an executive order to hand it over to Treasury, that's like a massive asset off this separate balance sheet. It's not like the government is one monolith. They actually have individualized budgets and balance sheets. And whoever's holding those Bitcoins, which wasn't apparently that clear, and there needed to be an investigation into that, which we haven't seen yet, but they would have to take off billions of dollars, like 200,000 Bitcoin from their balance sheet. And they'd probably prefer to sell it so that they don't have to transfer the Bitcoin. And so there was elements of whether that's happened and it should be investigated. And that was real speculation on my behalf. Whether that was something that they would engage with in doing. And so there was essentially an update from the Marshal Office as a result of a Freedom of Information request. And it was updated on X, and people were trying to verify it. But essentially, over the last 4 years, and we don't have all the full details, and the blockchain analysis we couldn't corroborate with as well. But the US government has essentially sold off almost 80%, approximately 80 to 85% of all of the Bitcoin strategic reserves that it thought it had. And so my question immediately was, because I was saying, remember, America doesn't have all of those 200,000, because 119,000 I can see on the blockchain that were retrieved as a result of a hack. And there was a Department of Justice case where the exchange that was hacked, Bitfinex, and I'm also a shareholder in, I happen to know that those belong to Bitfinex. And so it turns out that those coins are still there. So this must be separate wallets, but we don't have clarity, even though we got the Clarity Act. So this investigation should happen. But immediately I asked, what happened to the 119,000 Bitcoin from the Bitfinex hack? Have they sold those? And if they have sold them, they owe the Bitcoin. And if they owe the Bitcoin, they were essentially short Bitcoin during this massive bull market, and they'd have to buy those Bitcoin back, which is a big problem for the department as well. But they still show on the blockchain. So I know those 119,000 Bitcoins are still there. Now, the US essentially admits that through this Freedom of Information Act and providing a bunch of data that didn't have blockchain analysis, that the US now only holds 28,988 Bitcoin, which is separate to that 119,000 Bitcoin. So the US officially has to transfer, or hasn't transferred, or holds it in the DOJ, but it was meant to transfer it to Treasury, 28,000 Bitcoin, which is a massive drop from the previously proposed 200,000 plus Bitcoin, which means that America is no longer the largest sovereign nation owning Bitcoin, and therefore either has to catch up in a tax neutral way and buy that Bitcoin, or it won't do that. And China is now the largest holder or government holder of Bitcoin reserves in the world, because our data shows that China owns approximately 220,000 Bitcoin or 200,000 Bitcoin that they seized from, I think, the Plus market, was it Plus token Ponzi scheme or something like that. And so America's no longer got that spot. So this opens up a game theoretical scenario that China is essentially the largest government holder of Bitcoin, and America has to catch up. They can catch up on a market neutral way. There is an executive order that apparently allows that to happen without Congress. But at the same time, Cynthia Lummis is passing a bill or trying to get a bill passed, which hasn't made priority over Genius, Clarity, and Anti-CBDC Act. And so America does not currently have a significant Bitcoin strategic reserve, which means that it doesn't have the strategy to protect itself, which also means Thomas Massey's End the Fed bill couldn't be combined with a Bitcoin strategic reserve strategy. And so while America and the Trump administration are creating the environment for you to own your Bitcoin, make sure you do what the Trump administration is doing, follow his money, and protect yourself from America, because America is not protected. So you need to protect yourself. You need to understand custody and self-custody, and do not rely upon your government. Your government may have a slogan of make yourself great again, but when I follow the money, I see backhanded deals via stable coins that are making the Middle East great again, making China borrowed money being used and invested with through foreign direct investment, and a bunch of investment in foreign countries with NVIDIA, which we'll be covering in the macro section, that is making BRICS great again, and making the GCC Gulf Council great again. And some things that might make America great again, as long as you own stocks, Bitcoin, real estate, because they are pumping the shit through fiscal dominance and socialism, quasi-communism, crony capitalism, whatever label you want to put on it. But the big, beautiful bill is no doubt a stimulus package, which is inflationary and will only benefit those that have assets. So make yourself great again. Because your government certainly ain't doing that unless you follow the money. The macro is getting worse. And so that's going to be everything we do for this week in Bitcoin, part 1 of Bitcoin Hard Talk, episode 90. Just before I end and we move into part 2, we got a lot more we want to cover. In the macro section, I'm going to be going over what you can learn from EU and Japan and how that relates to what is next for US and China, just by analyzing those markets, and where the proof of weapons network is taking these markets. And in part 3, we're going to be going through the 2 stories, which is the connection between the Epstein files and all the drama that happened this week, and everything that happened in the Syrian war, and how those are 2 military operations that connect to the same types of monetary chains. All that we got to come. But I want to thank you, because each week I've been saying, we need to get to 100,000 subscribers on YouTube. And we smashed past 100,000 subscribers on YouTube. But we're not going to stop there. So I'm going to be thinking about a little incentive, because I want to set a bigger goal. For as long as my voice exists, for as long as we go through this Bitcoin AI and central bank digital currency transition, I want you to help me reach as many people as possible. And now we get to have a review from YouTube. We unlock some silver badges. We have to apply, and my team's going to do all that stuff that needs to be done. But we need to set a new goal. And that is that throughout my lifetime, I would like to have as many subscribers on YouTube, presuming I don't get shut down, and hedge against that risk, as there are Bitcoins when all Bitcoins are mined. So eventually I want to have 21 million subscribers. But that's a big goal. And we got a lot of time to go through together in this transition. And AI is accelerating things, and everything's getting faster, and everything's getting weirder. So let's break it down. I want to get 2.1 million subscribers before then. But what is this short-term goal? Let's get to 210,000 subscribers so that I can have at least 1% towards 10% towards that eventual 100% goal of having a subscriber for every Bitcoin that will eventually exist. So do me a favor, share this. Thank you so much for helping me get here. 25% of all the people that watched to the end are not subscribers. And so please hit that subscribe button. There are several resources. I have no agenda, no ads, no advertising. No selling my soul to other podcasters to do sponsorship deals. Just pure content with no agenda other than trying to get you to protect yourself as we share upon this Bitcoin journey and uncover the truth. And we get shadow banned, we get censored, we don't get organic traffic because they don't like the message that I put out there. Now things are improving, and I'm contributing to these algorithms, but I still need your support to get there. So the next goal is 210,000 subscribers, so that we can get to that fraction of Bitcoin for every single subscriber. So if you're not a subscriber on YouTube, please hit the subscribe button, hit the bell symbol, hit all. If you do not follow me on X, please go over there and follow me. I stream from there. And sometimes if YouTube censors or takes down the content, it still remains on X. In case that gets shut down, because I do get some people that don't like my content and complain about the truth because they don't want the truth to be there, those agents, then go to my Rumble, type in Simon Dixon and follow me there. I got a small following, but it's building every single week. If you want to watch this just by listening while you're at the gym or while you're driving, go to Apple Podcasts, look up Bitcoin Hard Talk. You can download it there, or do it on Spotify if you use Android or other devices, and you can get it there. And finally, everything's backed up on simondixon.com, where we have the Bitcoin Hard Talk membership portal, where I give content to anybody that's a member that has a free login. And then you get my newsletter every week as well, so you don't miss a thing. And all of any new content that I create, like these little AI summaries in real time. So please go ahead and do all of that. And that's everything I've got for you for this week in Bitcoin Hard Talk, episode 90. And we're going to now move over to part 2, Bitcoin Hard Talk, episode 90. This week in macro, what America and China can learn from what's happening in the EU and Japan. I'm going to have a little bit of water, put a comment, do a retweet, do the share, and then we'll go jump straight in with part 2.